Welcome to the daily update, where I'll go over the action in the market for Friday, June 27th, and we'll see how things look for Monday, June 30th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, new all-time high, both on an intraday basis, and looked like we were gonna give up those gains as the day unfolded, but going into the close, we saw some buying. Things are looking much more positive, maybe a little too positive right now. We'll look at some of the charts. There's always something to worry about as we're looking through these things, but we have the NASDAQ 100 setting another new all-time high, and that's helping the S&P 500 because there's a lot of stocks in both indexes. So we've pretty much recouped these losses and gone on to a new high that was set back in February previously and looking a little more positive. Now, Monday is going to be the last day of the quarter and of the month, and so that could... It could be either positive or negative, but it's kind of its own day as far as window dressing and money managers shifting things around to make their quarterly reports look better and their month-end reports and all of that stuff. So there might be some little maneuvering because of that, but the market's quite resilient and it's been holding up, and we've been able to recoup some of these really negative things that were developing, and now it looks like growth is outperforming value consistently. We're seeing the really big stocks taking charge of the market. We're also coming into a potentially positive seasonal time. Historically, it's positive. The first part going up to about the middle of July for the NASDAQ tends to be good seasonally. There's no guarantee that it's going to be that way this time, but we do have that underlying what's going on right now as well. So right at the open, we had a higher open, and prices climbed immediately above R1 at 61.56. That set the new high right at the open. And we got above R2 at 61.71. Then things, if there's one concern about this, is that as we're going up, we're just kind of drifting up. There's not an awful lot of conviction, and there doesn't seem to be a real power behind the upward move, but we're still going up nonetheless. But then some news broke that came out and said, maybe there's some problems going on here that I'll address in just a moment. Prices ended up going down. We declined. It looked like, okay, later in the day, the smart money's coming in. Maybe they're going to start selling. We dropped down below R2, R1. We even went negative. We dropped below the unchanged level. We found support at the daily pivot at 61.32. But then after that, we just went right back up and ended up closing at R2. So we were up 0.52%. We were above average with volume. So that was kind of encouraging there. We are positive across all time frames. We're not quite in an uptrend yet with the S&P. We did set a new all-time high. The 50-period moving average is still a little bit below the 200-period moving average. The more we stay above both of those moving averages, eventually we're going to click over into a golden cross. We've already generated a golden cross with the NASDAQ 100, and some of the bigger stocks are still looking pretty good there. The core PCE that came out, it was kind of the worst of both worlds. It's like, okay, spending is down, inflation is up, but the market, it's fairly positive when even not so good news comes out and the market still goes up anyway. So we're kind of at that stage with things. Interest rates did tick back up, but we're still well below that 4.5% level. And then we have to focus on the geopolitical things, especially when the market's closed, because the market can't react to that. And so if there's something that breaks between Israel and Iran over the weekend, there's always things going on there, but it hasn't been at the top of everybody's talking points for the last few days. but that could always change. And even if it isn't at the top of what people are talking about, things are still going on there all the time. And then there's news that came out about the tariffs that I'll go through here in just a moment. So, US and China confirmed their trade framework agreement that should increase rare earth exports from China. So that's good for the US, is also good for China. And then the restrictions that we're talking about with high-tech products going to China, that it appears to be being dealt with right now. And there appears also that there are different trade deals that could be announced. And that's being taken pretty much as positive. Then what happened was about halfway through the day, about lunchtime, President Trump posted on True Social that, okay, we're not going to talk to Canada anymore. They have a 400% tariff on dairy products and digital services that are being taxed. So he said, we will let Canada know that the tariff that they will be paying to do business with the United States. Okay, pure American attitude right there. And that was a little bit unsettling, and the markets went down after that. Also, we've got this big, beautiful bill. You might love it, you might hate it, but there's huge tax cuts in there, and that would really benefit things. And if that doesn't get passed, that could really endanger the economy. So that's one of the big things that folks that think there's more good than bad in the bill. It's mainly because of the tax cuts that are already there, but this would make them permanent. So but then with everything, if you don't like Trump, he could have a cure for cancer and you would find a way to complain about it. Where if he does something wrong and you like him, it's like you can justify what he does. It's just that's how divisive things are. But the hope is that the Senate will be able to rehash this thing, and they're making some adjustments to different things in there and eventually be able to approve it. And then the goal is that there'll be a signing ceremony on the 4th of July, which will be coming up on Friday. Then mega caps and semis, they're holding up. This is what's really driving the market up right now. Small caps, mid caps, they're still doing pretty good as well. And then we do have new all-time highs, not only for the NASDAQ 100 again, but the S&P 500 is now joining the crowd there. In our list showing good short-term momentum, you could also consider this to be overextended to the upside. But when all of these indicators come together, it is showing that there's more uniformity as far as the upward thrust. So we have the Stochc RSI, the Williams percent R, both CCI charts, the stochastics, the slope oscillator, which is actually turning back up now. We're seeing a lot of improvement with the momentum oscillators. We're still far away from the 20-period moving average, but we've been that way for a few days. And then the short-term RSI is also looking extreme. Intermediate term, we're in the +3 channel still with the standard deviations chart. Now that also could suggest good intermediate term momentum, but we just pay more attention to it when it gets up to that level. The CMB composite is looking extreme. The rate of change 50, that's probably going to be on the list for a while. Excuse me. And now our momentum oscillators in the short and intermediate term, they're actually switching back to positive. The long-term oscillators are still negative, though. It's going to take some time for those to actually turn and go back to being positive. The Sean trend meter, we're still far above the upper Bollinger Band, so the percent B is flashing there. We're far away from the 50-period moving average. We're extreme with the NASDAQ 100 bullish percent index. And now we're starting to get extreme with the RSI 14. And there's a chart later that Bloomberg post, I believe it was Bloomberg, says, uh-oh, this could be trouble. A pretty big indicator is starting to become overbought. Well, yeah, okay. But before it becomes overbought, it might still have a chance of remaining positive for a while. But again, we just want to pay attention to this anyway. No change to the overall Fed scenario. There was some speak this week for testimony from Chair Powell. Really didn't say anything new. A lot of wait and see, worried about economic growth going down and inflation going up. Then the dollar was up. It's just been getting hammered lately, but it actually bounced a little bit on Friday. Interest rates were also up. We closed at 4.28% with the 10-year yield, where after Thursday we were at 4.25%. We're positive as far as sentiment and not extreme. The closer we get to 75, that's when we get a little more concerned. We're still 10 points away from that at 65. And we are trending. We started to trend after Wednesday. We're still continuing to trend. And so things are improving in, I think, no, maybe it was after Thursday, but we had been in this trendless environment for quite a while. And now it's looking like a trend is starting to develop, which is positive because the green line is above the red line. We're still below 20, so it's not a confirmed trend, but we're above the moving average. With the up day, the bias is positive and our momentum is positive as well. All right, the economic reports. Personal income came in down. They thought it was going to be up 0.4%. It was down 0.4%. Last time it was up 0.7%. Personal spending was also down 0.1%. They thought it was going to be up 0.2%, the same as last time. The price index was up 0.1% month over month, which is what they had expected. This was the one that could have freaked out the market. Inflation came in hotter than expected, up 0.2% month over month. They expected it to be up 0.1%. And when you annualize this, the price index is up 2.3% year over year. That's greater than the 2.2 that we saw last time. So that's inflationary there. Prices are going up. And then we're also going up with the price index for the core PCE. Now we're at 2.7% annualized instead of 2.6%. Consumer sentiment still not all that positive right now. Came in at 60.7, a little bit better than the 60.5 they had expected. Last time it was at 60.5. And then going back, when you're looking at the previous report, it was at 52.2. So there is a bit of an improvement there. But when you look at it a year ago, it was at 68.2. So it's actually dropped from that point. But folks seem to be feeling a little bit more comfortable about things than they were earlier on. All right, so here is the personal income and spending year over year. The income, the yellow line, that's going down, but also the spending is going down as well. Is that showing some economic weakness? Inflation is ticking back up. It was coming down, getting close to this 2.5% level. Now it's starting to go back up on an annualized basis. Month over month, spending really dropped off where it had been positive in the last three readings. And then sentiment improving. The blue line is the total reading, showing a little bit of improvement there. And then the purple line is how people are feeling right now. And then the yellow line is how people are feeling looking down the road a bit into the future. So we did see some improvement that way. All right, then the link to oil. Now, this has been mainly geopolitical here. This is put out by Real Investment Advice. But you can see that we've been dropping down for the most part. So this is actually more positive for the market overall. All right, then stocks have gained in July 10 years in a row. Okay, well, are records made to be broken? We'll have to see. Are we going to have 11 years in a row now, or is it going to be 1 out of 10? We don't know. We're just going with probabilities here. And then this is ownership, including hedge funds. This is asset allocation. And looking through this, we can just see that most folks have equity here. That's where the largest amount is from. Not a real surprise in that regard. Some treasuries, some municipal bonds, but mostly stocks. That's still seen as the best way to invest with the possibility of capital gains. All right, this is the one I was referring to. The S&P is near a bearish overbought signal. It's not bearish until we turn down. We still want to respect this and pay attention to it. I have an RSI 14 chart that I'll show later, and we're getting close to that point now. This chart was a little bit overextended, but usually when we get, or I'm sorry, it's a little bit outdated. The one that I have will be after Friday's session. When we go above the 70 level, that's when we're not technically overbought until we turn and come down and then cross back below the line again. But when we're above this red line, that's when we do want to pay more attention to it. All right, then indexed return of cyclicals versus defensives. This going up, that's positive. That means the cyclicals are outweighing and outperforming the defensives. When we were really going down here, the defensives were outperforming. So this just means the market is switching back and looking more offensive rather than defensive. And then IPOs in with tech, they are outperforming. There's been some IPOs this year and they tend to do well. This is shades of the dot-com boom back in the late 90s, but there are good companies still. A lot of those companies that had pretend earnings went away, but so far they seem to be holding up at the current time here. And then the S&P 500's breadth is struck despite the rally. Not really. I'm not necessarily seeing that. Now, we do measure this. I have another chart that shows the members that are above their 200-day moving average. We're still above 50, and we've been improving. So this is still holding up fairly well. This is longer term. And then the annual top 10 list by market cap coming in here. And there are less than 20 names in both the US and China over the past decade. Okay, I'm not sure how useful this is here. Most of them end up being in the US, but these are just based on how big of a share their markets or their stocks are valued at here. Then we've seen some value areas outperform the Magnificent Seven, especially European banks, and that's been one of the areas. We're seeing it shift a little bit now, not totally shifting back, but in 2025, European stocks have been outperforming US stocks. And a lot of that has to do with the European banks. That's the dark blue line here. And then that's comparing it to the mega caps in here, which are doing well, but underperforming European banks. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. All right, so here is the chart. We did go up here immediately right above R1. We got above R2, and then you see there's just kind of chopping along, kind of drifting up a little bit, and then we started to drift down. Then this is when the news came out where Trump came out and said, "Oh, Canada, we're not talking to you. We'll tell you what you're going to pay." And that's when we started to drop, and we gave up all the gains. We came all the way back down to the unchanged level, but we did find support at the daily pivot. But this is encouraging. After this weakness came in, this is some smart money coming in and buying and actually pushing us up, and we closed just a little bit above R2. And then things settled down a little bit as we closed down for the weekend here. And we're still looking okay with the blue line above the red line with the intraday growth versus value. The growth to value ratio for the S&P continues to hold up well. End of day, growth was up more than value for the large caps. It was up where value was down for the mid caps and up a little bit less for the small caps. So, but when you look at the end of day chart here with small cap growth to value, still holding up fairly well. We're trying to improve here as far as price of the index itself, and came down a little bit with the ratio, but mid cap growth to value is still more growth than value right now, and that's positive. We are going up with the S&P growth to value ratio. That is positive. And we went up with the growth to value ratio here between these two ETFs. So this is holding up quite well. Seeing some improvement with the discretionary to staples growth to value, or excuse me, discretionary to staples ratio, which I treat discretionary as a type of growth. And we are still bouncing up above the 200-day moving average with the ratio. Large cap growth looking good above all the moving averages. The moving averages are starting to improve. And our trend, this is short term with the ADX. We're above the moving average. We are climbing. We're not up to 20 yet, but we are showing some strength with the ADX now. Intermediate term, above the moving average, green line above the red line. That's why we're positive with our trend. And we did spike up with volume. That's kind of interesting for Friday. It wasn't options expiration, and Monday will be the big end of the quarter day. Maybe some things were happening on Friday instead of Monday. As far as sentiment, we are still declining with the VIX. That's positive when we're going down below 20. That helps stocks perform better. But we did tick up a little bit with the VIX of the VIX, but we're still below these declining moving averages. The momentum for the VIX is now shifting to down. The MACD is measuring this downward momentum, which is more positive for stocks. We were pretty much flat with this fear gauge, up just a little bit here, and we were down with the other fear gauge. So not a lot of confirmation there. We continue to look solid with the risk on ratio versus risk off. When this is going up, folks are more risk on. And we're continuing to see the high beta outperforming the low beta. And this is more positive for the market. A little bit of a tick down, which is kind of strange. The equity put call ratio, not hedging ahead of a weekend using puts. We actually saw that declining here. And we're declining with the 5-day chart, and we're actually declining a little bit here with the 10-day chart, which is strange. Ahead of a weekend with all these geopolitical things in the background, you would think folks would do more hedging just to be safe. And we're still above the band with volatility risk premium. We've been seeing that picking up a little bit here. The advanced decline line, though, looking good. We are setting a new all-time high based on price. We've already been setting all-time highs based on volume, and that's more positive when we see volume leading price. Above zero and advancing with the 10-day advanced decline oscillator. That's positive. Above the midpoint with the short and intermediate term advanced decline ratio. Trying to turn up here, but we're seeing some healthy improvement internally with the S&P. The new highs are starting to expand and very few new lows, so we're going back up slightly. We haven't really gone up that much. We're flattening out with the 5-day chart, but we are starting to go back up with the 10-day moving average chart. Positive with our 3 smart money indicators above the red line. That's positive, and the boom indicators above its moving average and advancing. Chaikin money flow, smart money indicator number 2 is positive. We're going up with the red line. And smart money indicator number 3, the Chaikin oscillator, continues to go up. So we're seeing confirmation there. The vortex, green line above the red line, that's positive. And just wanted to show the advanced decline lines here. With the cumulative, we are setting a new all-time high for the S&P based on price. We had been setting all-time highs based on volume. And that's more positive when we see volume leading price. We're above all the moving averages with all of the advanced decline line studies. And then we switch this over to a broad market look where we're setting a high here with the NYSE cumulative advanced decline line. But then when we have a regular NYSE advanced decline line, setting a new high there. Here's another version of the NYSE advanced decline line, also setting a new high. So we're seeing some broad market positivity as well. When we just break it out based on common stocks, we're not back based on price yet here with the advanced decline line, but we are setting new highs here based on volume. And then a broad market measure of the 5-period moving average of the highs and lows above zero and now starting to go back up. That's showing internal strength across the market. Continuing to improve here with those stocks above their 20-period moving average and their 50-period moving average, 100-period moving average. Then this is that same chart that I showed earlier. It said stocks have been struggling here. Well, yeah, at times, but we're still above 50, and we did improve after Friday's session. And we are setting a new all-time high here. The red dashed line, that was the previous high set back on February 19th. So that's a good thing there. And we did see it on an increase in volume. And we're going up with the 20, 50, and 200-day moving averages. We're pretty much flat, though, with the 200. And then we look at our short-term indicators. Now, again, there's 2 ways to look at this. Is the backdrop positive? Then we can ride up here in this extreme positive area for a period of time. If we're seeing a counter trend move to the bigger picture, that's when we pay more attention to this and become more concerned. But the Stochk RSI is giving good, solid momentum, but also extreme positive at the same time. We're seeing that with the Williams percent R, the CCI 14 and 20, and all 3 stochastics charts are extreme here in the short term, intermediate short term, even though it rolled over a little bit. And we are improving above the moving average, but extreme with the long short term stochastic. Still looking positive with the force index. The condition of the short-term trend measured by 20 periods, that continues to improve. We're up in the +3 channel with our standard deviations chart. Now we go over to the intermediate term. Balance of power above zero. That's positive. We're getting extreme, but we're still going up. So it's positive with the CMB composite. We're positive with the go, no go with the darker blue bars. and we see the blue line continuing to go up. That's the highest high value. And so that is positive, and the midpoint continues to go up. This is a positive looking chart here. The Landry light still has us in an extended positive trend, as we're also seeing with the proper order. Positive trend there. And we've been improving over the last few days with the TTM squeeze. It was starting to give us a little bit of a concern, but now we're lighter blue and we're starting to go back up. So that is positive. Rate of change still giving us an extreme reading, as these much lower values are calculated into this indicator. Not seeing a big change, but we're still just a little bit above zero with the ease of movement. The Arun just shows that the buyers are outweighing the sellers. According to this, the oscillator is positive. We're positive for 2 days now with the S&P McClellan oscillator. So when that's positive, we're going back up with the summation index based on price, and we kept going up based on volume. Couple of days, I think it was after Wednesday, we were seeing price coming down as volume was still going up. Now they're more in lockstep with each other. We're also still above zero, even though we ticked down a little bit with the NYSE McClellan oscillator. So you can see this wavy move here. This is all this trendless environment that we had been stuck in for a while. Now we're positive with the summation index for the NYSE based on price and volume. Swollen trading oscillator advancing based on price and volume. That's positive. Crossing back above the moving average, but we are extreme with the PMO. That's why it's on the list. And we are now turning more positive based on price. We're coming back above the moving average, and we were already turning more positive based on volume. And we're above 50 and going up with the PMOs that are rising, just a little bit below 50, but advancing with the buy signals, and pretty much flat with the PMOs that are above zero. Positive with the Elder's Impulse system for the S&P, positive with the parabolic SAR, and now going back above the moving average, but above the green line here with our short-term slope oscillator. The MACD is now back to positive. We've crossed above the moving average. So we're positive in the short term and intermediate term. We're starting to cross above the moving averages. Where we're still negative is the long term, the TRIX and KST. Those continue to decline, and they take a longer period of time to turn positive. Not quite positive, but almost with the Coppock curve momentum oscillator. And up here in this initial extreme positive reading territory with the Sean trend meter, seeing the percent B indicator flashing in extreme reading because we continue to be outside of the upper Bollinger Band. Above 50 with the money flow and the ultimate oscillator. Still looking positive with on-balance volume. Just a little bit above 70 here. This is the RSI chart that Bloomberg put out there and said, uh-oh, we're at a major danger overbought signal. And it could turn out to be that. But for right now, we go with it until it proves that it's going in the other direction. So we're just a little bit extreme here with the RSI 14, where we continue to be extreme with the RSI 9. Intermediate term trend based on 50 periods, improving. Red line, blue line going up, price above both. Above all of the plotted moving averages, positive there. Still far away from the 20 and 50 period moving averages as measured by the boom indicator. Bullish percent index continues to go up. That's positive here. We're going back up with the NYSE bullish percent index and a little bit above 70, which means it's extreme with the NASDAQ 100 bullish percent index. And this is for the week. We were up 3.44%, setting a new all-time high. Weekly bars looking pretty healthy right now as we've been bouncing up out of those lows from April. We're positive on a trending basis with all our different trending charts here. Heiken Ashi is positive. The Kegi chart is positive. The Renko chart and the three-line break chart. All of those are positive. And we had enough of an upward move here to draw in a new X as we're setting a new all-time high for the S&P. We're above the midpoint with the 150 and 200 period moving averages here. That is positive longer term. And this should be switched over to positive. I'm not sure what's going on because both the mid caps and small caps are above their 200-day moving average now, but it still has them registered here as being in downtrends. Still looking at bonds being positive in the short term. Commodities are negative in the short term. The dollar is negative on all time frames. It's been that way for a while now. And then we had tech that was down a little bit here, but then the other areas, healthcare and energy, that's been dropping off. where we're seeing discretionary and communication, which are growth areas. Those were leading things in Friday's session, and that's positive. Awful lot of green here. We did see some red later in the day, but utilities had a BPI cross above 50 after they'd been seeing some weakness. We did set a new all-time high with the S&P, and we had a BPI cross above 70, just a little tiny bit there. Canada set another new all-time high. NASDAQ, new all-time high. NASDAQ 100, which is not on this list for some reason. And then healthcare is seeing a, now, even though it was down and it's been getting hit a lot, the bullish percent index is showing some strength there. And we're seeing a BPI cross above 80 with the tech sector. And then near the end of the day, we saw the NASDAQ crossing below 20,001. All right, then. So a lot of green in the growth areas. Amazon was up, Google, Meta, Nvidia was up, Microsoft down a little bit, Apple was up barely there. But when you see a lot more green than red, especially in the big boxes, that helps the overall market. So we're still continuing to go up here with our ratio between the weighted and equal weighted version of the S&P. When this is going up, that means the weighted version is outperforming, and that means the bigger stocks are having more of an impact. And we're not in an all-time high yet with the Dow, but it was up 1%. I forget, there was one stock that had a really, that came out with earnings that had a really good day, and the name's slipping me right now. And then we are positive with the diamonds, with the Elder's Impulse system. Then we look over at the NASDAQ. We're not, it's hard to see because of the S2, but we're not quite at a golden cross here with the NASDAQ composite itself, but we are setting all-time highs. And we are positive with the Elder's Impulse system. NASDAQ 100, another new all-time high, recent golden cross. This is the growth area of the market, and we like it when that's doing well if we're more positive on things. And we're positive with the Elder's Impulse system. For the Qs, momentum is now turning back to positive with the PPO crossing back above its moving average. And I've been pointing this out, it may not be a big deal, but it might be something. This is a trend line going back to 2009 with a weekly chart of the NASDAQ 100. We're hitting that underside of the trend line now. Is this going to provide overhead resistance? It's not automatic because we went above this before. What I did is I just went from the 2009 low and then connected these lows and then just extended that trend line forward. We'll see if that ends up meaning something or not. We just want to be aware of it right now. Small caps were up 0.25%, trying to break out of this recent range that they've been in. And we're above the 200-day moving average with the Russell 2000 small caps. That's why the stock charts, it should be over to positive because we're above that longer-term moving average. We're above 50 with the RSI, and we're turning back to positive with the momentum for the Russell 2000 small caps. And we're positive with the Elder's Impulse system, and we're above the 200-day moving average with the mid caps, positive with the Elder's Impulse system. And then the two broad market charts that we look at, the Wilshire 5000, doing really well right now, and also doing good with the total U.S. stock ETF, getting close to a golden cross. Financial sector, looking pretty good there, but we're coming back down a little bit when we do the ratio between the financials and the S&P. But we're still above the 200-day moving average. We came all the way down. We bounced up off of that. A little bit of a concern here. We would like this ratio to go up. It's generally better for the market when the financials are outperforming the S&P. FANG index, new all-time high and in an uptrend. And these are the really big stocks. So Apple, virtually unchanged, still hanging out around its 50-day moving average and in a downtrend. Amazon above both moving averages, up 2.85%. Not quite yet there for a golden cross. Recent golden cross with Microsoft, down a little bit after setting a series of new all-time highs. Google above both moving averages, up 2.88%, trying to generate a golden cross here at some point in the future. Meta, recent golden cross, up over 1%, not quite back to an all-time high. It could have been on a closing basis. Nvidia generating a golden cross. That's a big deal. This is the big stock that everybody seems to love, setting a new all-time high. It looks like here on a closing basis at least. This is really positive for the market. Tesla just kind of floundering around here, but just about ready to generate a golden cross. Netflix, another all-time high here. And this was the chart that held up the best as we were going through difficult times. And it's doing really good now that we're back in better times. Starting to generate a golden cross with the Dow Jones Semiconductor Index. That's a huge part of tech and the growth. This is quite positive and not quite at a golden cross with the SMH semiconductor ETF, but really looking solid here. This is that same ETF, but just showing a rainbow where we've been looking pretty good, not quite at this previous closing high here. And we're still going up for the most part, not a big change. But when we see this going up, that means the semiconductors are outperforming tech. We want tech to do well, but we want semis to do even better. And that's when the market tends to be stronger. And just kind of floundering around here with the short-term correlation between US and world stocks, still tending to go up just a little bit longer term with the correlation. And we were down slightly. We're in the mid 60s with oil. Dollar continues to be in a downtrend, even though it was up in Friday's session. Rolling over a little bit with inflation. We're at 2.19% as measured by Truflation, compared to the 2.4% that we received with CPI. Still below the 4.5% level. Interest rates have been more friendly, even though they were up in Friday's session. And we're still above the 50-day moving average and looking pretty good here as far as a price pattern with the price of the 10-year bond. We're inverted again, still for the second day with the 10-year to 3-month yield curve. Now, most folks focus on the 10 to 2-year yield curve. I also focus on the 10 to 3-month yield curve, and that's just been chopping around, going from inverted to uninverted back and forth. And that's usually just be aware. That can often be a recessionary signal. Looking at our growth to value ratio, still looking good with the Qs to S&P, improving but still below a declining moving average with discretionary to the S&P. Large cap growth is outperforming large cap value. Back above the moving average and going up with the large caps, rolling over but above the moving average with the mid caps, coming down but still slightly above the moving average with the small caps. And when the S&P is outperforming utilities, we see this ratio going up, and that's what we have been seeing with this chart. And when this is going down, that means staples, which are more defensive, they are underperforming the S&P, and that's more positive for the market. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. All right, so we are now in a trend that continues to develop. It's not confirmed until we go above 20, but it's official when we go back above the moving average. And you can, if you don't agree with that criteria, you can change it to fit your own particular style, but we are positive on all time frames. We're going to get the Chicago PMI in Monday's session, and then anything geopolitical or something happens internally in the U.S. domestically. We live in crazy times, and crazy things can often happen. Here is the economic calendar for the upcoming week. We're going to have Chair Powell speaking again. When he talks, the market listens. And then one of the big reports is going to be ISM manufacturing on Tuesday. We're going to get the ISM non-manufacturing or services on Thursday. Wednesday is going to be kind of a blah, blah day here. We will get the ADP employment change. We're going to get a lot of employment data this week. And then instead of Friday, we're going to get the employment report on Thursday in addition to initial and continuing jobless claims. So, yeah. And then, of course, the market will be closed on the 4th of July. Here's also another look at the upcoming economic calendar. Seasonality, not that much of a change for the last day of June. Neutral to positive, going back to 2002. Do see a little bit of flatlining here, but for the most part, it's been positive during post-election years for the S&P. That's the green dashed line. And we see a little bit of positive seasonality here, according to the Carson chart, going into the end of June. And then we sometimes dip going into the latter part of June before we tend to start coming up into July. And then no matter how you slice or dice it here, July tends to be positive, whether it's going back to 1950, the past 20 years, the past 10 years or a post-election year. We get positive returns any way you look at that. And then this is Stock Traders Almanac statistics for how July up through about the middle part of July, the NASDAQ tends to do well, which likely means the NASDAQ 100 might do well seasonally, which could also help the S&P 500. All right, so kind of a short list here. We're still in a downtrend with discretionary to staples, even though we're above both of the moving averages. And then I'll go over this in the deep dive video. We have the long-term special K oscillator is still negative. And then we got kind of a long list of positive things here. Our 3 smart money indicators, the long-term trend of the growth to value is positive, and we have both the NYSE and S&P McClellan oscillators and summation indexes are positive. Parabolic SAR is positive. The bullish percent indexes are positive. The swing trading oscillator momentum, except for the long term, we are turning positive again in the short and intermediate term. Ease of movement, money flow, ultimate oscillator, and the vortex are still positive. And I have this in gold. Anything in gold I consider to be a primary indicator. Either yellow, that's a little bit lower than a primary, but not quite a secondary. The white ones I consider to be secondary indicators. And the financial sector is positive. And now we've been able to add the momentum for the NASDAQ 100 back to the positive side. Here are the pivot points, which have already been updated on the YouTube community tab. All right, so our conclusion, we're positive now and we are trending. We're above the 200-day moving average, but we're still not generating a golden cross. If we can stay above those moving averages, that will end up happening, and that would switch the long-term trend back over to positive, but it hasn't happened yet. Thank you. I hope you have a wonderful weekend, and I will talk to you in the next video.